What a week. A massive political earthquake just hit Japan, and you better believe the shockwaves are being felt across the entire globe. We're talking everything from currencies to stocks. It's a huge reminder of just how fast politics can turn the markets upside down. So let's get into how one nation's political drama became a headache for all of us. So here's the game plan. We're going to start with that breaking news out of Japan. Then we'll see how it immediately blew up what investors were calling the TAKAICHI trade. After that, we'll zoom out and look at the US dollar's really surprising rally, check the pulse of the market's overall mood, and then wrap up by looking at what key economic numbers are coming up next week. All right, so the spark that lit this whole fire, a massive political bombshell out of Tokyo. After sticking together for more than 25 years, the very foundation of Japan's government just completely fell apart. And those were the words that did it. That's from the Komeito party leader Tetsuya Saito, officially pulling the plug on a 26-year partnership with the LDP. I mean, this isn't just a small disagreement. This is a full-blown political divorce, and it's thrown the entire country into a state of serious uncertainty. So what's the immediate damage? Well, it lands right on the doorstep of Sanaya Takaichi, the LDP's new leader. Her path to becoming prime minister, which looked like a sure thing just a few days ago, is now, well, it's a mess. Without her coalition partners, her ability to actually run the country and push her economic plans is now in real jeopardy. So politics goes haywire. What do the markets do? They reacted instantly, and I mean instantly. This thing that everyone was calling the Takaichi trade, which had been building up steam, just hit a brick wall at full speed. So, what on earth was the Takaichi trade? Well, it was actually pretty simple. It was the big bet investors were making on her economic plan, which they nicknamed Sononomics. The expectation was that she'd just open the floodgates of government spending and keep monetary policy super loose. Basically, a perfect recipe for a weaker yen and soaring Japanese stocks. And boom, here's what that brick wall looks like. The second that news broke about the coalition, Nikkei 225 futures just nosedived, down 2.6%. The entire promise of Sononomics just vanished into thin air, and the bullish feeling for Japanese stocks went right along with it. And it wasn't just stocks. At the exact same time, the currency market did a complete 180. The Japanese yen, which had been getting weaker and weaker, suddenly found its footing and strengthened. The dollar-yen pair tumbled down to 152.39 as everyone scrambled to get out of that bet. The entire Takaichi trade completely unraveled right before our eyes. Okay, so while the yen had that quick moment of strength, if we zoom out and look at the bigger picture, the real story in the currency world this week was the US dollar. It's been on a surprisingly powerful and, frankly, unexpected rally. And here's the thing. It isn't really about the US economy being super strong. It's more of a cleanest shirt in the dirty laundry situation. We've got the euro and the yen both getting hammered by their own political dramas at home. So where does all that nervous money go? It flows into the US dollar. It's winning almost by default. And this really lays it out, doesn't it? We have political chaos in Japan on one side and political chaos in Europe on the other. With two of the planet's biggest currencies looking so shaky, capital is just flooding into the US dollar as the perceived safe place to park it. It's the relative winner, hands down. And let me tell you, this rally is causing a world of hurt for a lot of traders. For months, the big popular bet was to short the dollar, to bet against it. Now, that's what we call a pain trade. All those people are being forced to buy back dollars to stop the bleeding. And guess what? That just adds more fuel to the fire, pushing the dollar even higher. All right, so we've got political drama, we have wild swings in currencies. We think the stock market would be terrified, right? Well, the story there is kind of weird. It's almost the exact opposite of what we might expect. So that brings us to the big question. Are investors actually scared right now, or are they still feeling greedy? The answer is pretty wild. Get this. The CNN Fear and Greed Index is sitting at a whopping 82. That is deep in extreme greed territory. It seems like stock market investors are just completely shrugging off all these risks. And we know why, right? It's the AI hype train. It just keeps chugging along, pulling the major indexes to new highs. But, and this is a big but, if we peek under the hood, things don't look quite so rosy. Sure, the big indexes are hitting records, but look at this. Almost 65% of individual stocks are actually declining. This isn't a broad, healthy rally. It's being carried by just a handful of giant AI companies, while most of the market is struggling.
That's a classic red flag.
Okay, so what's next? Well, besides keeping an eye on the political headlines, we've got some massive economic data coming down the pike that could really shake things up. Let's take a look at what's on the calendar. The week ahead is absolutely stacked. The two we really need to watch are coming out of the US. First, on October 15th, we get the Consumer Price Index. That's the big inflation number. Then, on the 16th, it's retail sales, which tells us if people are still out there spending money. Trust me, the Federal Reserve will be watching these reports like a hawk. And speaking of the Fed, right now, the market thinks it knows exactly what they're going to do. The odds are over 91% that they're just going to sit on their hands and keep rates where they are at the October 29th meeting. But this is exactly why that inflation report is so crucial. If that number comes in hot, these probabilities could flip on a dime. So this is the puzzle we're left with. On one hand, we've got political bombshells causing chaos in the currency markets. On the other, we have an AI-fueled stock market that's screaming extreme greed. So the big question is this market truly priced for perfection, totally ignoring all the risks? Or is it setting itself up for a major fall? Thanks for watching. Don't forget to like and subscribe.